The best time to buy and sell stocks. Explained. Have you ever felt that fear in the pit of your stomach when the stock market takes a dive? Or perhaps you've seen a stock soar and wondered, should I buy now? If you're struggling with when to buy or sell stocks, you're not alone. The market is a maze of emotions, and knowing the right time to act can feel like trying to catch a moving train. But what if I told you there's a better way to make these decisions? A strategy that could help you stop second-guessing yourself and start making smarter, more confident financial moves? Stick around, because today I'm going to break down the best times to buy and sell stocks. And trust me, it's not as complicated as it seems. Point 1. The emotional side of investing. The stock market is an emotional roller coaster. One minute you're celebrating a major gain, and the next you're watching your portfolio take a dive. It's easy to get caught up in the excitement of a bull market or the fear during a bear market. But guess what? Emotions are your enemy in investing. If you buy or sell based on how you feel, you're setting yourself up for failure. This is where a clear strategy comes in, one that helps you ignore the noise and stay focused on your financial goals. Point 2. Timing the market, the challenge. The old saying, buy low, sell high, is great in theory, but in practice, it's much harder to pull off. Timing the market is like predicting the weather. You might get it right once in a while, but most of the time you're guessing. So, should you just throw in the towel? Absolutely not. You can't control when the market will rise or fall, but you can control your actions. It's like trying to predict when your favorite team will win the championship. No one knows for sure, but you keep watching anyway. Point 3. Why long-term investing wins. Here's the truth. The best time to buy stocks is now, and the best time to sell stocks is when you reach your financial goals. Let me explain why. The longer you hold onto your investments, the more you benefit from compounding returns. In fact, studies have shown that long-term investing in broad market indexes, like the S&P 500, tends to outperform trying to time the market. Think of your investments like planting a tree. You're not expecting to see huge returns tomorrow, but you're creating something that will continue to grow year after year. Can you imagine waking up 20 years from now and seeing your portfolio expand into something? Point 4. Sell based on goals, not market trends. The best time to sell isn't necessarily when the market is at a high. It's when your investment no longer aligns with your financial goals. You might have bought a stock with the intention to hold for the long term, but over time, the company may shift directions, or your goals may change. Remember, the market will go up and down, but your personal strategy should be based on your goals, not on the day-to-day fluctuations. It's like being on a road trip. Just because you hit a pothole doesn't mean you turn around and go home, right? Point 5. Consistency through dollar-cost averaging. Here's where things get really interesting. Dollar-cost averaging is one of the most effective strategies to avoid the stress of trying to time the market. All it means is that you invest a fixed amount of money at regular intervals, whether the market is up or down. Over time, this strategy helps you buy more shares when prices are low and fewer shares when prices are high. Imagine you're consistently investing, no matter what the market is doing, and watching your wealth grow steadily. It's like planting seeds in the ground, then walking away and letting nature take its course. Point 6. Stay focused. Avoid emotional pitfalls. Investing is a marathon, not a sprint. The biggest mistake most new investors make is letting emotions dictate their decisions. You see a headline about a market crash, and suddenly you panic and sell everything. Don't let fear control your financial future. The most successful investors have learned to stay calm during volatility and stick to their strategy. Think of it like a roller coaster. You wouldn't hop off halfway just because you're scared, right? Stay strapped in, keep your eyes on the prize, and enjoy the ride. Point 7. Buy when you're ready. Ultimately, the best time to buy is when you're financially prepared and when you've done your research. Don't buy based on FOMO, fear of missing out, or because you heard it on the news. Buy when you're ready, when you've established your strategy, when you understand the risks, and when you're in it for the long haul. And in my next video, I'm going to reveal one simple trick that could help you maximize your returns without making any drastic moves. You won't want to miss it. Did this video help you? Hit the like button if it did, subscribe for more tips, and don't forget to ring the bell so you never miss an update. Remember, successful investing isn't about timing the market. It's about timing your strategy. See you in the next video.